Good afternoon, everyone. Thanks for joining us as we're going through an amazing opportunity with the Securian product that has been launched out in California. My name is Paul Williams. I'm a life sales director over here at IAMS. But before we get into this, there's just a few things I'd like to go over with you about IAMS and the services that we offer our advisors. And first, I would like to bring up every new advisor that we bring on board over here with IAMS. We really try to start a true partnership with them. And one thing that we do is our new producer bonus. And as you can see on my screen here, through the first 180 days after contracting with us, you qualify at each level for different tiers of things that you can get. I mean, at $100,000 level, that's, an FIA business, or if you did $10,000 in a life target premium, we'll do a mailer for you, or if you wanted an iPad, $750 cash to spend however you want, that's just something that we do. And as your production keeps going, at the $250,000 level, 3,000 piece mailer, and it just continues to go up. Now, I do want to point out, once you have used it, so you get to the $100,000 level and like, okay, I want to use it now. Well, the rest of this stuff goes away. So that's the reason we give you the first 180 days to go through this, to accumulate as much as possible to use these services that's going to be best beneficial to you. And the other way that we really try to make this a true partnership over here at IAMS is our IAMS Business Builder. We do have a referred program, so every agent that you think would be a good fit to work with IAMS, like yourself, and you send them over, we're going to cut you a one-time $50 check saying, hey, thank you. We really appreciate the referral. But where the real value is added on this is as that agent is starting to produce, you actually get a small override on what they are making, and this does not affect the agent's commissions at all. This is just another way we're saying, hey, thank you for referring this great producer over here to us. Here's a check. And I've witnessed Steve and Chris Conroy and Curtis Hawks stroke multiple $1,000 checks to these agents. Great way to make passive income. But once again, I mean, that's just trying to show the value and how we're trying to create that partnership. And this, our marketing reimbursement program here. So we'll pay $100 towards your marketing for every $100,000 in index annuity premium, and $200 for every $100,000 in premium, and $200 for every $10,000 in target premium for life. So once again, and this money can be used towards any marketing program that you choose. We do recommend that you use something in-house, as we have negotiated prices down, and you're making that money stretch further for you, but use it however you see fit. And our back office support, I mean, what we were originally founded on by Charles Herring back in 1986 is really top level service to our agents. And our back office support works tirelessly to make business getting placed to getting paid as fast as possible. I know on the life insurance side, we're touching cases every 72 hours to make sure that any requirements that are out there, the agent is notified about it. If we need to schedule paramed exams for your clients, we're happy to do so. We'll pre-screen this stuff for your clients. We have an in-house underwriter. If something goes bad and the client gets rated or there's a decline, we'll actually take that case and we'll take the information and shop it around for you, saying, okay, it may have been a decline here, but we know there's other options out there, and we'll do that for you. And all this is done on the back end. You don't have to ask for it. We do it, and we come back to you and say, hey, if your client still would like to move forward, here's another option. And our IAMS website, this is a great resource for all the agents. If you are currently contracted here with us at IAMS and you have not been out there to kind of research it and what's offered out there, our sales resource library is fantastic. It has hundreds, if not thousands, of articles out there for you to be able to use, fact finders, calculators, retirement analyzer, and also just like this webinar, we record everything. So if you're like, yeah, I missed that one, go out there to the IMS website, go to the YouTube page, find it, click on it, and you'll be able to watch it. Also, we have our quote tools, our online forms, as well as our e-app platform. That's where you can submit business, all out there on the website. So very useful. And mentioning e-app solutions, we do offer Luma, Firelight, iPipeline, and Sunfire, which all these they're single sign-on, so it makes the ease of use very simplistic. So once you first sign on, you just go out there and enter your information for your application, hit submit, gets sent out to the client signs, and comes back to us. We'll review, send it to the carrier on your behalf. And if anybody has any questions about the information that I'm going through here, feel free to reach out to me or one of your life or annuity sales directors. Call it's 1-800-255-5055. All right, so next up is our creative services. Our team does a fantastic job with this stuff. They're not like your traditional techs that are not working in the industry day in and day out, or having a friend build out a website. I mean, these guys truly know the driving forces behind getting clients to your website, what's going to stick out to them, what's pertinent and what's going on in the industry. And this is stuff that we offer in-house. I mean, if you need a logo design, business cards, websites, handouts, brochures, whatever it may be, give us a call. We'll set a meeting with our creative department. We'll go through things with you. We'll come up with some designs, have you review those before doing anything. Once again, this stuff is really great to have. And next up is our IMS Wealth Management. So this has been a really strong sector of growth for us over here at IMS. I think we're entering and coming up into our 7th year on that. And the wealth management team has done a fantastic job, really making business stick with the agents. So, I mean, the more lines that you can have with one client, the more likely that, you're going to do business with them for their entirety. This is really taking a holistic approach. If you're looking at retirement planning and helping, with your clients, I would highly recommend getting in touch with Duncan if this is an area that may interest you. And, once again, I can help facilitate that appointment for y'all. And our life and annuity academies, this is a great way to, talk to your peers out there in the industry, learn kind of, what's going on with some of the top producers in the nation, trends that are coming down, what's working for them, marketing. And we usually run 3 or 4 of these a year. Our next one will be coming up sometime, probably late spring. I would highly recommend, if you have not attended one of these, to do so. But, yep. So like I said, coming up next spring, late, we'll be starting to ramp up for this. And they usually run until October or so. And our trek to Quebec, this is a qualifying trip, as you can see on there. It's an 18-month qualifying period, started in January of 24. It's going to run to June of 30th. And as you can see, also, it's, 5 million points, which that is based off, production with life, annuity, long-term care. And it's a fantastic trip. 5 days out there, fully paid for. If you'd like any additional information on this, reach out to one of us, 1-800-255-5055. And as always, like and follow us on Facebook. We're constantly posting new information out there, downloadable files for you to use on your website or send over to clients. But from here, I am going to turn it over to Charles, and he's going to take us through the Securian product that has been introduced to California.
All right, all right. Thank you very much, Paul. For everyone that doesn't know me, I'm Charles, Securian's linked benefit regional sales consultant for Secure Care. I've been with the company for the last 3 years. Looking forward to a very productive future with this organization. It's a great place to be, I can tell you that. But I want to thank you very much for having me today, Paul. Thank you for the opportunity.
Yeah,
Before we get into the product, let me just tell you a little bit about who Securian is. And before we get too deep into anything, I do want to just give everyone a heads up. I've run into some technical difficulties, so Paul is going to be working the screens for me. So you'll hear me say next slide, next slide. I apologize if it irritates anybody. With that in mind, Paul, can you flip to the next slide for us? Thank you, sir. So who are we? Securian uh, has been around for over 140 years. A lot of folks don't know this. We're one of the oldest insurance carriers in the marketplace. We're currently the fourth largest in linked benefit sales, thanks to the Secure Care product line. And we are carrying $5.4 billion in benefits provided GAAP every year. Well, last year, i.e., 2023. And currently, we've got more than $1.6 trillion of life insurance in force and more than 23 million customers across the country. And that's just a little bit about who we are. What this doesn't tell you is that we are a mutually held company. We are not publicly shared. And there's a lot, and I mean a lot, of security behind a corporation like Securian, who has a Comdex rating of 96. Will you go to the next slide, please? As you can see here, we have very nice ratings across the board. We've consistently ranked in the 90s, in the above 94 since 2017, even through COVID, where a lot of corporations had that really high, almost 100 being the ceiling. Um, a lot of companies dropped down low, really low. And some even today, such as, well, I'm not going to name my competitors. That's not very proper. But some very major players have dropped below the 90 mark, which means there's some things going on in their market share. Uh, with that, the proof is in the numbers. Uh, let's get into the product. You go to the next slide, please. So what does a client get with Secure Care UL, with a Secure Care UL policy? It's very simple. Every Secure Care policy is going to provide 4 guarantees for each policy, okay? Every client is going to have the same 4 guarantees. The first is that if they have a long-term care event, they will receive a cash indemnity long-term care benefit. And second, when they die, their beneficiary is guaranteed to receive a tax-free benefit. The third is a return of premium option. I'm not going to get too deep into it right now. We'll definitely cover it later on. But if the client wants their money back, they have the option to get their premium back. And fourth is the reduced paid up benefit, an RPU, if you will. If the client can't make their payments or decides that they want to stop paying their premiums because of whatever, maybe COVID happens again and the world shuts down and people just lose jobs, right? Heaven forbid it. They don't lose their benefit. Instead, they'll receive a reduced paid up benefit that will continue to inflate with whichever inflation rider they opted into. Um, can you go to the next slide, please? Excuse me. Sorry. Let's run through a quick. Let's take a look at a quick case study here. We've got a young lady at the age of 60. She's married, doesn't use tobacco, and she's got $100,000 that she's got in, let's just say, an old life insurance policy that she wants to move over. We'll just use that as an example. She decides to take that and put it into a Securian UL policy with a 6-year benefit period and 3% compound inflation protection option, because her top priority is, making that long-term care benefit pool get as big as possible. The first 2 years of the client's benefit period would come from the acceleration, where it's going to spend the dollar, it's going to spend down the death benefit dollar for dollar based on the day one value. Okay. Um, the next 4 years would come from the extension of long-term care benefits, which is basically where Securian starts paying for everything. The insurance side, if you will, and ultimately providing the client with a total of 6 years in benefit and almost $700,000 in benefit dollars. But because of long-term care inflation protection agreement, from day one, it's going to be $217,000 plus $103,000 plus the $227,000, making $331,000. But with the inflation agreement, that total grows to nearly $700,000. Ultimately, Securian UL will combine the benefits of a long-term care protection with the guarantees of having life insurance, and that can be a very powerful tool. Can you go to the next? I think two. Yeah, one more. Thank you. So let's look at the product a little deeper, right? In addition to those 4 benefits, some other things that the clients are guaranteed is the premium scheduling, right? There are 5 different premium schedule options, and all with no modal factor. So if the client wants to pay quarterly or monthly or semi-annually, they're not going to be penalized for that. The premium schedules are going to be, as you can see here, is a single pay, a 5, 7, 10, and 15 pay. Okay. The client can choose, from 4 different inflation protection options, where we offer 3 and 5%, both with a simple and a compound inflation rider. I will say this while we're discussing it. The majority of policies that we see, and this stands not just true for Securian UL, but also for Securian 3, which is what's going to be outside of California. It's going to be Securian 3. But I digress. The majority of the policies are going to be strongest in the 3% compound or 5% simple option for the majority of age ranges, and that's just kind of the way they built it. So it would shine in that ballpark. Now, with that aside, a client can choose a policy with long-term care benefit duration between 2 or 7 years. So the big thing with this is I want to key in on this inflation rider, is that the benefit pool does not ever stop growing. It continues to inflate until it is depleted. And with that in mind, well, I'll reach into that a little in just a few moments once it's depleted. But Secure Care UL's structure separates the premium payments for the base from the base life insurance and three between the base life insurance and three long-term care agreements, which is going to be your acceleration for long-term care agreement, the extension for long-term care agreement, and obviously the inflation protection if it's elected. And the reason I bring that up is because they do dissect that on each illustration on one of their pages. I believe it's page 4. I don't have an illustration in front of me to look, but it's definitely on the illustration in one of the first 5 pages. I'm pretty sure it's 4. The reason I mention that is because there are some potential tax advantages for certain clients. Uh, Folks might be able to use dollars from a HSA to cover a portion of their long-term care, a portion of the long-term care amounts, uh, or even to fund the UL policy itself. And business owners may be able to deduct healthy portions of their long-term care premiums from their taxes too, as can any client, or may be able to, I should say. Can you go to the next slide, please? Um, I think we went one too far. You can go back one. There we go. Oh, go forward one more. Sorry. This is interesting. Um, a few other things that I want to tap into with the benefits are, like I said, guaranteed cash indemnity benefit, but also that guaranteed death benefit. That is huge. So even if the client completely depletes their long-term care benefit pool, i.e., they outlive their policy or their benefit duration, their beneficiary is still going to receive a guaranteed minimum death benefit of whichever's the less, either $10,000 or 10% of the policy's original face amount. Okay, so that's a pretty good strong selling point. And also, it's you get the guaranteed long-term care benefit that we were just talking about, having its tax advantages being that it is part of the 7702B tax scheduling code. Um, but I told you I'd get back into, we'd come back around to the return of premium options. And I just want to go into those briefly with you so you understand exactly how it works. Every policy is going to have a return of premium option selected. And there's 3 options there. The first is the vesting. The vesting option is, if the client wants their money back, they can get up to 100. They can get 100% return of premium according to a vesting schedule, right? Um, Now, if there's also a 75% option, which provides the client 75% of the premium paid upon surrender. Why does that sound appetizing to anybody? I don't know, but I can tell you this. It does also offer approximately 15% larger long-term care benefit pool, making it a little more cost effective or a little more cost efficient than the vesting option. And lastly is the long-term care boost option available for the is available for the Secure Care 3 product. There you will have the option to allow the policy to grow to the true cash along with its true cash value, and upon surrender, that's what you receive. Meaning the cash value can exceed cost basis. I say all of that to say this. Currently, that is the Secure Care 3 makeup, and we are working on making Secure Care UL follow suit. Um, Additionally, it will provide the largest long-term care benefit pool that's going to be available to the client, making it the most cost efficient. Um, a client can choose from the different inflation riders as we discussed, and ultimately know that they have the flexibility to use that benefit whenever they are 206 ADL deficient and have been certified, i.e., their doctors has provided their plan of care for them. One of our doctors will verify the information and certify the client. They can start their claim that soon. There is going to be a 90 calendar day elimination period. However, there's a 0 day home modification and caregiver training allowance that totals $6,000. It's literally available to them like the day after they are certified. I'm not kidding you. They're ready to write the check as soon as they certify. It is upon request, but I want to lean back into that 90 calendar day elimination period because, in all frankness, I know with some of our competitors, it's not the best 90-day option out there, right? But what doesn't get mentioned a lot is this fact. With Secure Care, the client's 90-day calendar can be retroactively dated to the date the client was diagnosed. Now, let me give you an example. My grandmother, God rest her soul, she had dementia for years, a bit later in life, and lived for a long time with it. Like there was nothing really wrong, like everything was fine. And every year she'd go get checked up, do her testing and whatever they do for folks with dementia. I fortunately didn't have to witness all of that. But I say that because that happened every February. Every single February that happened. One year, it was like a light switch. She just completely declined. I mean, it was horrible. We got a call from the police. She was out wandering around in the neighborhood, didn't know where she was, didn't know where she was going, didn't know where home was. It was just all bad. Fortunately, she had her purse with her, and in her purse is my father's business card. So the police were actually able to reach out to our father and we were able to recover our grandmother, my grandmother, his mother. Now, I bring all of that to your attention to give you this example. Literally, within a week, we had to put her in a full-time, 100% assisted living facility to make sure she wouldn't hurt herself or wander off. In that example, that 90-day elimination period, even though this was happening in August, was retroactively dated to February when she was recertified having dementia. And it took approximately 10 days to get the first payment. After that, boom, they were in like clockwork every 30 days. Um, there's also a terminal illness rider. The terminal illness rider is going to, if a client is diagnosed as terminally ill, they can accelerate their death benefit 100% less $12,000. Okay, so whatever their face amount is, they can accelerate that up to the entirety of it minus $12,000. And what that does is it kind of acts as a twofold option here, or it kind of doubles in purpose. The first is, there's a guaranteed minimum death benefit. It will pay for that. And it doesn't matter what the face amount is, it's going to be $12,000 for every single policy. It's just standard. The second reason for that is because to maintain a true long-term care status and keep the integrity of the policy, it has to be open for 24 months at $500 a month. So hence the $12,000. A little bit of it may be more useless information than I may be leading on, but you get the gist. Can you go to the next slide, please? Excellent. So here we're looking at the issue ages and how they coincide with the premium scheduling. Uh, Again, we've got a single 5, 7, 10, and 15 pay premium schedule. The key here is that each policy must be paid up by the time the client is 80 years old and before they turn 81. There is no exception and there is no wiggle room. They're like very airtight on it. With that said, somebody 65 years old can get a 15 pay premium schedule. 65 and younger, no problem. Um, Digging into that a little more, there is also the ability to save age. I meant to mention this earlier. I apologize for not. If the client turns, 62, they're turning 63 next week. They can save for the age 62 for up to 30 days after that client's birthday. All we need is the application in good order so we can get it submitted to underwriting. And we'll go through underwriting here in just a few slides. I just wanted to point that out now. The minimum monthly long-term care benefit amount is going to be $1,500. And these are the underwriting classes available to us. It's very simplified issue. There's going to be a male or female option and either a tobacco or non-tobacco rating, both with a single or a couples discount. And I say couples discount because it's important that I clarify this. The couples discount is available to anyone that is married. They do not need to be both applying. If they're married, they get the discount. If they are in a state recognized civil union, domestic partnership, whatever, they get the couples discount. The key is state recognized. Can you go to the next slide, please? So speaking of underwriting, here we go. Before I shift gears here at all, are there any questions at all? Does anybody have any questions? We're looking pretty good, Paul? All right.
It seems
So
like that we do have one question out there. It says, can we underwrite an employee with employer as payor?
absolutely. Absolutely. That's actually a very, very, very good question. Yeah, I've got there's a couple of key points I can point into on that. I've got a whole presentation actually that goes around employer benefits, or how it can be set up as an executive carve out or something to that effect. But the short answer is absolutely. The key with Secure Care is we just need the funds that are not, we need non-qualified funds. It cannot come from a credit card. Well, obviously, it needs to be non-qualified. That's it. As long as the funds are non-qualified, boom, you can 1035 exchange in from an old policy if you want. We're going to actually look at that very shortly. Um, does that answer your question pretty well? Oh my goodness, everybody's on mute. I'm sorry. If you want to know anything else about it, definitely put your questions in the chat box. Paul will be able to see them. I'm happy to answer them. But for now, we're going to move forward. Okay. Can you go to the next slide, please?
Yep.
All right. Streamlined underwriting. Fun stuff. Fun stuff. Fun stuff. All right. So currently, Secure Care is approving more than 74% of policy of applicants. And the reason for that, I think, is because of this pre-screening process right here. We recommend that every single applicant goes through pre-screening. I mean, it's up to you. As the agent, your clients better than we do. We're just saying it definitely helps keep. It allows the client to do a full underwriting pre-screen, basically, like an informal, if you will, without it actually going on their medical record. It'll be totally anonymous. The most important thing to remember here is that with the pre-screening process, the client not only has the um, anonymity of just finding out if they're eligible, but also they're going to be talking. Well, they're not going to be. You will be, or I will be, whoever you need to do it, is going to be talking with the actual underwriters, which is pretty cool. So um, there's no medical questions on the application itself, right? The pre-screen is your main opportunity to check if your client is going to be eligible, if this is going to be a good fit for them, before they go through underwriting. Um, you can use our impairment guide or our pre-screen checklist. I'll definitely make sure to get those to you, Paul, so you can get, so whoever wants them, you can, so you have them. And I'm going to point this out. It's a little embarrassing. For those of you that have not spoke with me in the past, I do actually have a speech impediment. So if it seems like I'm stumbling a bit, I apologize in advance. It can be fun sometimes, though. I can tell you that. The pre-screen process is very simple. You can either call this 888 number, or send a pre-screen request, a quick quote, if you will, to this Secure Care quick quote at securian.com email. And I'm just going to put this out there. You can always use me as an option as well. Sometimes emails might not get responded to fast enough. I know how to light a fire under somebody's feet. Let me know if you need my help. But I would always recommend calling that number if you haven't heard anything or you just want to do a hypothetical, because these folks will actually talk to you and tell you the truth behind anything that they're looking for. Um, and lastly, with the pre-screen process, is very awesome because when they say, well, actually, no, they're going to give you a pre-screen identification number, even if they say the client is not a good fit or the client's going to have a postponement period, right? They're still going to have a pre-screen checklist ID number. That pre-screen that pre-screen identification number is very awesome in the sense that you put that number in like the advisor's notes or on the cover page or in the application when you submit it. And they're going to get that application back to the same underwriter that already reviewed it, which ultimately is going to make it easier on the client because they already have gotten that much out of the way. Now, let's get into the actual underwriting side of it. Can you go to the next page, please? So the underwriting process, again, like I said, it is very streamlined. It's very simplistic. You can submit an application, whether it's e-app or PDF, i.e. paper. We definitely recommend that you try to get the medical authorization of release to third party, that will allow IAMs and you to get information if a client's declined. Otherwise, we can't say a peep. It's just, hey, they were declined. And of course, we can always get you the form. That's never a problem. But I would strongly recommend making sure the client knows what that really is for. It's like if something goes wrong, if you get declined, I can go talk to him and find out why. I can go start the appeals process for you. You see what I mean? With that, once the application has been submitted, we'll use a streamlined underwriting process. And when I say streamlined, I mean it's this simple. There's no paramedics, no exams, nobody's coming to the client's house, nobody's poking and prodding, none of that. We don't need any labs or blood work, nothing. It is all done via telephone interview. They're going to be asked a series of questions. So the part two is not going to be on the application. For some folks that aren't familiar with our process, it tends to set up off a little alarm, like, wait a minute, where's the underwriting stuff? It's coming. It's just we're going to have the underwriting scheduler call the client so they can schedule that interview for whenever is most convenient for the client. And that's literally how the process works. Um, Now, there are a couple of other things that I want to point out. Every single application is going to have a 5-year MIB check. In other words, they're going to look back at the medical records 5 years, and then they're going to look back at the prescription records for 7, right? And what they're looking for in there obviously is whatever's in there, but most importantly is for clients that are the age 55 to 60, they're just looking for there to be at least a general exam, like an annual checkup on there within the last 5 years. And if they're 61 and older, they want to see that it's been done within the last 3 years. Um, they don't. A lot of folks don't get told that information. That's why I bring that specificity up now, as I think it's important, you know. But let's talk about the next part in the underwriting process. There is going to be a cognitive assessment for every client that is over the age of 60. Up until the 16th of this month, so up until Monday, the age was 56, but they raised it to 60. So now to be more in line with our competitors and their cognitive assessment age, mandatory age check. Now, that doesn't mean a client under the age of 60 won't get, you know, cognitively assessed. Uh, if they have a family history of, dementia or early onset Alzheimer's or something like that, then they're more than likely going to be subject to cognitive assessment. Uh, Again, Secure Care UL is only available in California. And everything that I have mentioned to you is very much true for Secure Care 3 as well. I just want to keep that fresh on the radar for you. If you go to the next slide, please. And this is our product line approval map. You'll notice there is one grayed out area. That is the great state of New York. We do not do any business in New York at all. Not life insurance, at least. However, clients that are in the state of New York, they can still get a policy if they have a residence outside of the state of New York or a business that's domiciled in another state. Um, Business owners, agents that reside in New York, they also need to have a place of business outside of New York, maybe Jersey or something, or wherever they need to be, just out of New York. The key here is they have to be out of New York. Um, Everywhere else, Secure Care is available, with California being the exception to the rule of Secure Care 3. They get Secure Care UL uh, until further notice. With that, can you go to the next slide? All right, sales idea and marketing resources. Now we're talking good stuff. You remember I had mentioned to you about 1035 in somebody's old policy? Can you go to the next slide for me, please? So, Securian is not totally unique, but we'll say one of the few providers, right? One of the few carriers that will actually accept a 1035 exchange and then split it internally, like in the house. So instead of having a big old bucket of money and having to put all of those resources into one vehicle, they can divide that money into two different policies. Um, this can be a really effective strategy. It really can, because I see folks with huge 1035s all the time, and they're like, well, if the maximum face issue of a secure care policy is 500,000, what do I do with the rest of the money? You know, here's the solution. Or maybe they don't want that much of a face amount for a long-term care policy. You know, um, but here's how it works. Let's say you've got a male, in this case, 55, with a $200,000 old permanent life policy. He can 1035 that money can 1035 exchange that policy, and the Securian will split that 200. In this example, 120,000 into Secure Care UL with a 3% inflation rider, uh, and 80,000, the remaining, going in to one of our index universal life policies, such as the Eclipse Protector in this case, or I'm sorry, Protector 2 in this case. Now, if they need long-term care at 85, they'd have almost $1.2 million in long-term care benefits available to them from just their Secure Care UL policy. Alternatively, if he uses all of his long-term care benefits and passes away, he's still going to get that guaranteed minimum death benefit, but he'll still have over $300,000 in death benefits from the Eclipse Protector 2. That's pretty strong. That's pretty strong. Ultimately, though, uh, the 1035 exchange, it is going to unlock the possibility of approximately $450,000 in death benefits between the two policies, and more than $1 million in long-term care benefit coverage. Excuse me. Can you go to the next slide, please? All right. As stated, I am Charles. That is the conclusion of my presentation. If you have any questions, don't hesitate to reach out to me. Or if you want to schedule a meeting or anything like that, don't hesitate. We've got a lot of great marketing resources for you, including more sales ideas and consumer-proof tools, right? So, like I said, you're at someone asked about if this can be used as if an employee can buy it and the company pay for it. Yes, I've got a lot of different sales ideas that I'd be happy to help you with or go over with you. But be sure to check out my personal landing page. This is the email address. I mean, the address here, securian.com/Charles-King. That's going to take you to my landing page. There you can schedule a meeting with me. You get to see my schedule. It is up to date. If I'm gone or busy or whatever, you will see. I encourage you to take advantage of it if you need anything at all, including illustrations, or if you want me to show you how to go over illustrations, whatever the case, you have access. Okay. Thank you all very much for your time. I'm going to leave the floor open for any remaining questions that are out there.
Fantastic. Thanks, Charles. I really appreciate you jumping on and going over this product with us today. There have been a few questions that have trickled in since you've been going over it. One gentleman asked, kind of what's the difference between the Secure Care 3 and the UL product?
Great question. Great question. The first and foremost difference I'm going to say is the return of premium options is going to be one of the biggest things. With Secure Care 3, that's where those 3 return of premium options that I mentioned, that's where those kick in. The client with the Secure Care UL will always have option of getting their money back once according to a vesting schedule. But that's one of the key differences. The other key difference, dare I say this, is the leverage factor. If you look at a Secure Care 3 policy in, let's say, Nebraska, and then look at a Secure Care UL policy, you're going to see it's weighted a little different. And that's what we're working on right now. I'm going to just be fully transparent with everyone here. We are not the most aggressively priced in Cali, and that's just the truth and the facts. What I can tell you is the other guarantees that come along with the policy are second to none. Some other things that are going to stand out with regards to the differences between Secure Care UL and Secure Care 3 is going to be well, actually, really, no. That's no. I'll tell you about the ability to add an additional first year premium. Couldn't do that with Secure Care 2 before. Now with Secure Care 3, say that client does have a 1035 exchange, say they do want to do a 5-pay or 10-pay or whatever, but they also have a little nest egg they want to put in up front with that 1035. They have the freedom to do that. Or if they don't have a 1035 and they just have a little nest egg they want to put in up front, they can do that. That's another big difference. Aside from that, the differences are not very, very, very noticeable at all. As far as how the policies are written, they are identical, minus the one being on a UL chassis and Secure Care 3 is on a whole life, a non-participating whole life platform. That's the other major difference. Secure Care UL versus whole life. The Secure Care 3 is more considered asset-based protection. In the sense that it does also carry that whole life component to it. Even though the Secure Care UL does function the same way and it holds the same guarantees, it is on a UL chassis versus not. Any other questions?
Yeah, I believe that you had brought this up earlier in the slides, but one gentleman asked, can you take funds from an IRA? But you had mentioned something about that it can only be non-qualified funds. Is that correct?
That is correct. With that in mind, there are IRAs that are pre-taxed, but for those that are not, like say traditional, if you will. I do have that backwards. It's been a minute. Anyhow, one way around that, you can open a SPIA and use that SPIA to fund the policy. If the main source of funds was that IRA, you could absolutely open up a SPIA and use that to fund it. That's just one way to do it. The other way, obviously, the client could take the money out, take the hit, and then bam, they're not qualified now. But I wouldn't recommend doing it that way because you never know. Taxes might get better one day. Some other options, being that we're talking on IRAs, some other options that are coming very soon. We don't know exactly when, but I'm almost certain it's going to be in 2025, I think in third quarter, but I don't know for sure. That's the problem. I just know it's coming and it's the next big thing that we're adding to Secure Care on both lines. And that's a PDA, the premium deposit account. So if a client has a 10-pay or 15-pay or whatever, they've got a premium schedule, and say they run into a nest egg and want to pay it off early, they're going to add that PDA here in the very near future to the policy so that they can put that nest egg in there Say maybe somebody passed and they inherited $20,000. They say, hey, I want to pay it off as much as I can as early as I can. That having that PDA will make that possible. And currently, it is not possible to do that. Premium schedules are going to be fixed, and level, fixed and level. Um, yeah. Any other questions?
All right. All right. Last question, and this just for me, for my personal knowledge, I did notice that in one of the slides, it had mentioned having a robust international benefit. Could you kind of go over some of those benefits there?
Yes, I apologize. I did miss that part. Yeah, I'm glad. Thank you, Paul. Man, it's good to have somebody else watching your back sometimes, I tell you. Um, yeah, the international benefit for secure care, and I say secure care because it's the same for both. Uh, is in my opinion is the most competitive in the market share, and I say that because of this. Securian will allow access to 100% of the long-term care benefit pool for the client, not just the acceleration portion, and not just they're not limited to how much they can take. They will be able to access 100% of their long-term care benefit pool. The key is, and this is something else that is unique to secure care. I'm glad you brought this up again. uh, they'll receive, if a client has a long-term care event uh, while they're abroad, they can receive, they can still make a claim. Securian just needs to receive the medical records in English at no cost to Securian to translate. And they'll start, once everything's approved, uh, or certified, I guess would be more accurate. Once the claim is certified, the client is certified as chronically ill, the process will start. The doctor that's prescribing this plan of care for them does not need to be licensed with the United States. I repeat, they do not have to be licensed with the United States. They just need to be licensed in whatever country they are prescribing that plan of care, or practicing medicine, to be more accurate. Um, there's something else I'm missing. Oh, yes. Uh, once the client is Once the client's claim is approved, they will receive their benefit at 50% rate for 100 for the entire life of the long-term care benefit pool. So what does that mean? Basically, with a policy that's 2 to 7 years, let's say they've got a 2-year policy, or let's say they've got a 3-year policy at 50% rate, because, and again, this is that unique feature I was talking about. Securian is going to put every dollar that the client doesn't take from any monthly amount back into their long-term care benefit pool so it can continue to inflate, even the inflation portion dollars, right? What does that mean is that 3-year benefit period is going to turn into 6 years or more, because they're getting it at 50% rate, and it's not going to stop growing until it's depleted. Um, yeah, yeah, that's the beauty of our international policy. But I also want to point out uh, that the same does apply, even if they are in the States, or more importantly, if they come back to the States, their benefit will go back to 100%, and everything will adjust accordingly. So like if 3 years you're over there for, two, you still got like 2 years if you're on the stateside left on your. You get what I mean? that series of words is a little difficult to spit out. It's difficult for me to get out sometimes. Um, but yes, any long-term care dollar that the client doesn't use, say they got a $10,000 a month benefit, it started out at 5,000, it grew to 10, and they take 8,000. That means there's $2,000 that are considered inflation dollars. With every one of our competitors, that $2,000 goes back to the agency. I mean, back to the courier. With Securian, it goes right back into the client's long-term care benefit pool, so they can access it later. And with
Awesome.
that, I am going to put one more thing out there. I'm a firm believer, and if I don't ask you for the sale, I'm never going to get it. So when you have a client that is actually looking at long-term care, please consider Secure Care. Give me a shout. Give Paul a shout. However you need to access me. Okay? I'm happy to help you from beginning to end. I think I'm done now.
Perfect. Thank you, Charles. I really appreciate your time and going up to this product with this. But yes, if this is something that you think you have a client that has a fit for, reach out to me. I'm happy to get you contracted and get started over here with us at IMES. Once again, I can be reached at 1-800-255-5055. And with that, I believe that is going to end our webinar today. Thank you, everyone, for joining us, and I hope everyone has a great weekend. Thank you again, Charles.
Hey, thank you so much, Paul. And as you said, thank you everyone for sharing your time with me today. And I wish everybody a very Merry Christmas and Happy Holidays. Take care, you all.
Thank you.
Thank you. Bye bye.